Hello and welcome to an all-new episode of the Bitcoin News Show right here on the CryptoCast Network. Thank you, ladies and gentlemen, so much for joining. We wish you guys, of course, the happiest of the happiest wherever you are. We have a lot of stuff to go over today, but before we do that, let's go ahead and check out the website here, guys. We are screen sharing CryptoCast.network, where you can find all of our links, the YouTube links and Spotify links, iTunes links, all that good stuff. And we, of course, at the bottom of the screen have our donation link, as this is a community-supported YouTube channel. So we very much thank you guys for all the donations and all the tips that you guys give us. So with that aside, let's go ahead and stop the screen share and get right into your quick bit section here. Just going to make, exit full screen. Just going to make me full screen right now, guys, so I can go through your quick bits section. So here we go. A lot of fun stuff this week, guys, actually. So we got, I had a live debate that was pretty fun with Mr. David Gerard, the author of The Attack of the 50-Foot Blockchain, on the topic of, will Bitcoin become the world's reserve currency? So I had a really good time with that. I hope you guys get a chance to check that out. That was really fun. I have a link, of course, to all of this information in the show notes below. And then we have a fun one. CZ, guys, the CEO of Binance over there on Twitter, has actually claimed to want to activate SegWit by the end of 2019. Thanks to our good friend over there, Mr. Udi himself. As I try to tell everybody, guys, Udi is not a real person. He's ethereal. He's just an idea. You guys can't actually touch him or anything like that. He's not tangible.
He's an egregore.
Yeah. So
he's a thought for
yeah. So that's about scammers. Yes, Patrick. All right, let me finish the quick bit section. So that was really cool to see. Then we got this is another fun story, guys. We have some executive departures over there at the crypto firm Blockchain. We've been trying to tell you guys for years now how terrible this company is, how anti-Bitcoin they are, and now, of course, we see that the management over there, from Mr. Peter himself, one more Peter on Twitter, is not doing so well, as everybody is continuing to jump ship from that terrible, insecure wallet of a company. So make sure you guys check that out. Then we have the Bitcoin trading in Hong Kong has spiked, guys, reaching the highest ever levels recorded. So again, in any time there's countries where there's unrest, guys, Bitcoin's going to be there, whether that's in the form of local Bitcoins or whatever it is. It's definitely going to be there. So let's make this exit minimize video. Still learning the software, guys, but I'm getting it here. Then we got this is pretty interesting, guys. Some interesting new technology coming down to help again resolve some of the Bitcoin network congestion. We have a new idea called Secure the Bag, which is pretty interesting. It's going to cut transactions in half, so that's going to be interesting to see how that works. Then we have a bunch of investment announcements, guys. We got Fold app launching a new Sats back feature. We got with a new investment that they raised. Then we have Bottle Pay, which is Lightning Network tipping, a Lightning Network tipping company. They've raised $2 million. So lots of Bitcoin startups getting raises here this year. Lots of stuff going on. We have a Tokyo-based crypto exchange, Coincheck, has launched a program that will allow users to pay for gas using Bitcoin. That's really cool. Just to see more people, more crypto and Bitcoin-based companies expanding more and more features to their customers, offering more and more services. This is how it's going to be, guys. Lots more stuff coming down the pipe. Then a little bit of a sad story. October 1st, guys, does mark Ross Ulbricht's 7th year in prison for his and his petition now is actually reaching, for his petition for clemency is now reaching over 200,000 signatures. So we're just under 250,000. We're going to get that up there to the 250,000 as fast as possible. Make sure you guys check out the link and sign the signature. Then we have Bitcoin donations. More of a positive story here. Bitcoin donations are now feeding thousands of people in Venezuela, thanks to bitcoinvenezuela.com. Make sure you guys check that out. They have a Twitter account. See what they're doing. Just just a few bucks just helps, goes a long way, and they have a great history. So make sure you guys check out that company. And then we have the Understanding of Bitcoin. This is pretty interesting, guys. Understanding Bitcoin's price volatility is a new article by Nick Bhatia, who of course created the Lightning reference rate. And so this is really interesting to see, again, just Nick putting out more and more interesting articles about understanding how Bitcoin works and the liquidity and the network and the economics of it. Really great. He's of course now over there at OpenNode, just got a position over there. So again, congrats to you, Nick, on that. And then finally, the final story, guys, Trezor has released a Bitcoin only firmware, which is so awesome, guys. So if this is really cool. If you guys are a Bitcoin person, and you don't want to care too much about the altcoins or be exposed to the vulnerabilities and the craziness that happens over there, now you don't have to. Now you can download a Bitcoin only firmware firmware for your Trezor. And that way, guys, you can don't have to be exposed to any of the extra externalities or extra vulnerabilities or extra bugs and things that happens when you try to support a ton of altcoins. All right, guys. So that took a few more minutes than I thought, but we got lots to say. So let's go ahead and get to the introductions here. Let me switch the screen so everybody can see everybody. There we go. Really proud, as always, to bring you guys more and more panelists. Today, guys, we have Wes, the host of Let's Talk Crypto podcast and COO of CryptoFish.com. Wes, how you doing?
Hi, good to be here, Vortex. Thanks for inviting me.
Yes, sir. I just had an interview with on your podcast, so really great, guys. Make sure everybody check out Wes's podcast. He's got a great Bitcoin podcast. We're gonna have a couple of podcasters on the show today, so it's gonna be pretty fun. Then we got Mr. Brady himself, the host of the Citizen Bitcoin podcast. Brady, how you doing?
Great, man. What's up? What's going on out there, Bitcoiners? Thanks for having me, Vortex. Appreciate it.
Yeah, Bitcoiners. Really glad to have you again. Another great podcaster, guys. Make sure you check out Citizen Bitcoin, another great Bitcoin podcast. There's just so much content out there these days. It's getting hard to follow it all. But again, just really loving the enthusiasm and passion from everybody. And then joining us once again, guys, he's been returning to the show now a couple times, Mr. Patrick himself, the CEO of TradeLayer, a decentralized derivative exchange. So Patrick, how you doing?
Doing pretty good. By now in October, so I first came on at the end of January, and I was like, soon we're gonna have something, but this time it's for real. Finally, sooner or later you get done with development.
That's how it goes, guys. Everything takes longer. Cool. Everything always takes longer than you think. And this is what's so funny about people, sometimes criticizing Bitcoin development. It's kind of hilarious, guys. This is just how software development works. But really great to have you back, Patrick, man. And again, guys, he's got a pretty awesome platform coming out. Been working on that stuff for a while. So make sure you check out Patrick's work there. All the Twitter accounts to all these guys are in the show notes below. So let's go ahead and get into the first topic of the day. Pretty exciting topic, proof of keys, guys. Proof of keys now is less than 100 days away. So for those of you that don't know what this is, that are new to Bitcoin or to the crypto world, this is an annual event happening every year on January 3rd, where essentially we're like demanding and taking possession of all Bitcoins held by trusted trusted third parties on our behalf. So the whole point of this is essentially to sort of test the trust, right? Test the trust of these institutions to see if they are in fact running fractional reserve. So let's go with you, Patrick, first. Do you see this? Do you think of this event as sort of like our duty, maybe as hodlers of last resort, to sort of test these people, these exchanges, these corporations, and these other services with this annual event? What are your thoughts on this?
Well, everybody loves to hate on Coinbase and stuff. So, if you think you're going to expose the fractional reserve scam in Coinbase, then there gains a certain imperative excitement around it. So the places where I usually have Bitcoin custody are derivatives exchanges where you have a fractional, like the fractional reserve is baked into the cake. You can open a position to hedge 50% or 100% or whatever your whole Bitcoin stack. You can have some of it off chain, and you only need, however much margin, you don't want to get margin called on like a 5% move, right? So you have like 20% maybe, right? And you can control that. And they offer you 100x margin, not so you can kill yourself with leverage, although you can try to make money doing that, but it's so you have this flexibility. So yeah, I think a lot of these guys aren't running fractional reserves. They're just trying to make a little bit of money. So it's really about the big shibboleths like Binance or like OKX or some of these guys where they're completely unregulated. Kill yourself with leverage. That would be really useful. What I'm really into is proof of reserves, where you have you don't have to do these periodic kind of protests. You just have a hash of a big wallet and pathing and some other notes involved. I think there's a lot of promise there. And then, this whole episode really makes me think about if Bitcoin didn't exist and we were all like Tea Party people who were disappointed that Ron Paul got shut out of the Republican debates, and it's 2010, okay, Obama, so we're Tea Partiers, and we're let's take all of our money out of the banks, and let's buy gold, and that's our protest of the corrupt system, and of course mechanically it wouldn't have worked the same way, but the mainstream would have looked at that and said, I've got my money in Citibank, and you guys, you're taking money out of like regional banks, and this is for like this fringe. So like the problem with Bitcoin is that people who don't have a lot of money and they can't afford to take a lot of risk have an operational risk that is technically sophisticated and that has a non-trivial risk of ruin if they lose their keys, which is actually more probable, or if they're like sloppy about, their hot computer, they have like a dated version of Windows that's riddled with like reg key corruptors and worms and so on, and they get their money stolen that way, right? So then they look at an exchange and they say, this is a devil's bargain, but I've been made, or I'm not even aware of that, but like, okay, whatever. You make them aware. They say this is a devil's bargain with Fred Ersham here. He's a nice young man, but not your keys, not your coins. You gotta appreciate this. Yeah. And people say, I don't want to take the risk of self-custody, and that's the bottom line, right? So this is why the ecosystem, which was supposed to be decentralized, never mind the exchange infrastructure and the fees. Let's put that aside for now. Just the custody thing. People lean on the convenience, and then these exchanges have professional CSOs and sysadmins, and there's a lot of pathologies where they can get hacked and they have to think through it all. And then when they get hacked, sometimes people lose their money, but they often have their careers derailed. Like Bitfinex is the notable exception. They've managed to somehow, like Kim Kardashian's sex tape, they just flipped it into a positive somehow. It actually made them more successful. So fine, but that's because people want this trust so much. They like really want to have a daddy who they can just give their coins to and they don't have to worry about it. So I believe in the future that multi-sig custodial solutions where you can call someone up and verify your identity and be like, yeah, I lost my key. They'll sweep your money into a new thing. Maybe you do it with a 2 of 3 or a 3 of 5 or something like that. There could be multiple parties, or there could be staking underwriting operations where like I'm Mr. Decentralized Custodian. You don't even have to trust me. You will be paid if you hold this token in the event that you don't get the actual coin back from the multi-sig. One of these combinations is going to proliferate. And when we can make the UX this one-click experience, and then like 2% of the time you have to, I got to call and I got to go through this, and that might be crappy, low friction. It might be better customer service than banks give you, but banks have really put a lot of money and effort into doing that better. So, customer service, it's a cost center for a business, that nobody likes to have like a lot of cost in customer service, and it's commodified. And in the 2000s, it was crappy. Now there's like more big data and like everybody's like metrics driven, and they'll lose their customer service job, so, okay, we've like made it better. It's always going to be like crappy for the enterprise or the user or both. But we have to nail that part. So that's one thing that Coinbase, of course, is notorious for, is having like abominable customer service. I've had money stuck on Coinbase. It's a nightmare. You can't get through to them. There's no phone number to call with all the money they've raised. So perhaps they'll be seeing competition from that. On the fee side, you can already go buy your Bitcoin through Bakkt, even though their volume is trivial and they don't trade on weekends, which is like a huge setback. You're going to pay a few basis points versus like 25 on Coinbase. So that's the liquidity side of it. And they're, it's taking some time. Price of Bitcoin fell because weren't the numbers we hoped, but in time that will happen, and the custodial side will as well. So that's what exchange CEOs, et cetera, and other financial services CEOs need to be paying attention to and learning from this protest, is that, their quality level's here and it needs to be like up here.
Yep, that makes sense. That makes a lot of sense. And also, just so you know, FY, Patrick, your volume is kind of going up a little bit and then back down to normal. So just FYI about that. Careful about the mic or the volume. But yeah, a lot of great points in there. Yeah, Coinbase customer service just absolutely terrible. And perhaps this proof of keys could maybe bring out some more information that we haven't learned before. So yeah, so a lot of great points in there. Let's go ahead and go with Wes. Let's see if your mic is working over there, Wes. What are your thoughts on this so far? Yeah, there we go. I can hear you. So let me ask you, Wes. So let me ask you here. do you believe that this proof of work, do you think that this can really perhaps strengthen the network consensus overall?
Proof of keys.
If we keep doing this every year, yeah, proof of keys.
Yeah, absolutely. I mean, we must remember that a lot of people have come into the ecosystem recently. I would say within the last year, and you see it I see it every day. Friends, family. I sort of take for granted how much they actually know about Bitcoin and how to store Bitcoin and how the private and public keys work. And I mean, sure. Besides checking if exchanges are doing rehypothecation or, what did you call it, fractional reserve and that, I think it also can teach people how Bitcoin works. It's an opportunity. You can make it fun. Get people involved, and the bonuses, they learn good OPSEC, how to actually manage their private keys. So all in all, I think it's a win. I mean, at the very least, they'll learn how to back up their keys, how to, move, store. And on cherry on the top is we find out if the exchange that they were using is actually solvent or not. So yeah, it's a win-win all around. And I'll take my hats off for Trace Mayer coming up with this event.
Yeah, and it's almost not even just a test if they're running a fractional reserve. It's almost just a test if they're actually solvent or not.
Yeah.
So that's a great point. Because we've seen some failures time and time again. We've seen some failures, especially around Proof of Keys Day. We've seen like empty Gox. We've seen Quadriga CX, Hit BTC, Poloniex. So you think this can really act as a reminder then to all the new people that are constantly coming?
Yeah, not only a reminder, I think also will help educate people. People will hear about this in years to come, and it will be an opportunity, or it will nudge them in the right direction to actually learn a bit more about Bitcoin, learn a bit more about what the premise of Bitcoin is, and that is to be in control of your wealth, in control of your keys, and that was the basis on which Bitcoin was invented. Yes, we can. We're not saying to people that they mustn't put their money on exchanges because they want to trade and things like that, but I think the takeaway here is to be dealing with third-party services that are honest and and solvent, and at the same time, people are learning how to use Bitcoin better. And what a great opportunity to do it.
Absolutely. Could not agree more. And again, hats off to Trace Mayer, who is the creator of this event and, who had the original idea and created the website proofofkeys.com. And again, make sure everybody check that out because we really are trying to strengthen, I think, the overall ecosystem. And I think that this really helps do that. Again, proving which exchanges are solvent, which coins are actually there or not. And again, we are, the hodlers here. We are the hodlers of last resort. So in the end, we are the ones that control, this network really at the end of the day. So it really is important to make sure that other people don't get to be more in control than the actual hodlers themselves. So great comment. Let's go with Brady with you next. What do you think about the comments so far and this Proof of Keys Day? Like, do you think that we can consider like this Proof of Keys event like a combat readiness drill almost?
Yeah, that's a really good way to put it. And I mean, all the comments are right on so far. Definitely shout out to Trace Mayer. Man, he's like the OG in my mind. Like he's out there just always educating. Amazing guy.
Yeah.
And yeah, this is like I think a critically important event for us as Bitcoiners to establish as like a regular event. I mean, this reminds us of what Bitcoin is all about, right? We're supposed to replace trusted third parties, and this is a bearer asset. We're supposed to have control over the asset directly. We hold our own keys, not your coins. So this is like the number one most important thing about being a Bitcoiner. Having it once a year, I think, is a great way to remind new people that come into the space year after year that this is what's going on. So you got a new coiner on Bitcoin Twitter, and they're like, "What is this proof of key thing all about?" And it's just a chance for us as more experienced Bitcoiners to educate, year in and year out at the while we celebrate the Genesis block. So it's also a chance to teach history. Yeah, I think it's just a really great idea. It's a genius idea, really. And last year we already saw like why it's important, not just to teach people about what's most important in Bitcoin, but Quadriga CX failed within like a couple of weeks after Proof of Keys Day, and that had something to do with it. They weren't running a full reserve. Obviously, then this dude mysteriously dies in India that's like running, and he's the only one that is holding the keys to all of the Bitcoin that they apparently have. So yeah, I mean, we had one exposure right there, right off the bat in the first proof of keys day. And that's, that's a big success right there, right off the bat. So it's pretty awesome.
Absolutely. And of course, we've had proof of keys for a number of years, though. Just so you know, last year was the one
right
was the first one that I really started talking about, and this year is the one where I'm really kind of pushing it a little bit more, because again, just like you guys said, it's just so important. All of these points, all of these things, they overall educate and strengthen the network. And so just so people to the new people out there, if you do want to, run your own full node and hold your own private keys and really obey that, not your keys, not your Bitcoin rule, and not your node, not your network, then really is important to check that out, because this is free open source software. You can go down and to the Bitcoin Core website and just download Bitcoin Core yourself and run it on a Purism laptop. I mean, that is pretty much like the most simplest way, running on an air-gapped Purism laptop. But if that's too much, there are some awesome boxes out there now that you can just plug right in, plug and play, like the Nautilus and the Casa node. Some really great stuff, some really great hardware coming out for that. So make sure you guys check that out. They make it really, really easy to run your own full node. And both those devices come with other additional software, like a Lightning node as well, so you can participate in the Lightning network, and even more awesome software like BTC Pay Server, so you can actually run your own merchant software, your own merchant processing software. So that's really, really, really great. And I just want to read a couple things here from Trace Mayer's website, proofofkeys.com. He says, that hopefully it will prevent further annoying skirmishes, with those people who despise individuals empowered with monetary sovereignty. Because again, guys, we're all hodlers here. We've been through we've had pretty much extensive war experience with BIP 148, UASF, No2X. We've seen what these companies can do when you don't control your own node. And so, we hope that this will really sort of prevent that kind of thing happening in the future. And again, basically, hodlers, we risk nothing by doing this. We do not trust, we verify, we are in control, and we can prove it on the blockchain. So definitely claim your financial sovereignty, guys. Get those coins off those third parties. Make sure they're make sure we're going to test these people and make sure. And of course, we know the vast majority of you guys already have control of your coins. But there's traders out there. There's people who have stuff in lending companies, right, and things like that. So we just encourage you just to take that off the exchange for a little while and hold that again, and then keep your vast majority, of course, in cold storage. So make sure you guys check out that proofofkeys.com, and we really appreciate it. So before we move on to the second topic, guys, we really appreciate it if you guys are new to the channel. Make sure you hit that subscribe button, and make sure you hit the thumbs up, because that really helps us get into more people's feeds, helps get us into more people's YouTube feeds. So make sure you check that out. And again, guys, if you enjoy content like this, we would very much appreciate if you guys could check out the donation link on cryptocast.network. It really, every donation helps, guys. Every single tip helps. So we really, really very much appreciate it. So without further ado, let's go on to the second topic of the day, guys. Maybe people are sick of hearing about ICOs by now, but I think it could be with good reason, because I think this is going to be a good subject, because we're going to talk about basically how ICOs are dead, and the SEC is essentially kind of going after the remains. So let's again start with you, Patrick, on this. There were articles about the ICO market maturing, but of course that seems to have not panned out, right? And in fact, the ICO Watch website, where we used to keep track of the stats, has gone out of business. So we've seen this drop of over 95% in the ICO market, from 7.6 billion down to just a few hundred million this year so far. So let me ask you, Patrick, is one of the reasons for the ICOs going away, is it just simply greater regulatory scrutiny? Is that why? Or what are your thoughts on this?
The whole game is, if you can flip it, then it's not really an investment. You can just kind of get in, get out. So if you can get it listed, right? So then the exchanges realize, well, getting it listed is really the crux of it. So let's charge people a $5,000 listing fee, a $10,000 listing fee. I remember I got quoted the Bittrex listing fee once upon a time was under $2,000, because Bitcoin, it was like 2 BTC, and Bitcoin was under $1,000. So boom. Right. So those numbers vastly inflated into the 5 figures, the 6 figures. So then you get into this IEO model, where all of the exchanges have their own coins, and they can say, hey, this isn't a shit coin. We have real cash flow. And it's true. It's a great business model, right? It does throw off a lot of cash flow. We'll do buybacks to burn it, right? Okay. And then you get all these other frills. So if you own enough of it, you get into our IEOs, and it's almost like a dividend, where we'll get you an allocation in this thing at like an artificial price. And we'll do the ICO cycle in miniature, right? and then, you know, you list it, and then you have to like be a market maker and underwrite that. So you end up kind of theoretically losing money and probably losing money in practice to this quick flip dividend of the exchange coin holders. And it ends up being a 5-6 figure listing fee that way, right? So the IEO model has taken all of the fun parts of an ICO and like made it into like a slushy. And the performance hasn't been great either, you know? So the deeper question is like, how do you do corporate governance where investors' rights are in the forefront? So with something like Bitcoin, you don't have any kind of fiduciary parties. Everybody just kind of gets into this occupy money, cypherpunk, volunteerism kind of vibe, or they do for-profit things, and that creates an ecosystem, right? With even publicly traded companies, even one like a mid-cap stock that owns a lot of real estate in California. I was reading an article about this, and they basically haven't been doing much with the asset, and management pays themselves like you can pay yourself $1 million a year and deduct it from corporate tax. So it's like, yeah, you know, I'll take $1 million. And sometimes they do it with stock options, so they dilute the float, and they do like short-termism and buybacks. But this is like a smaller company, so it's just like, yeah, there's cash flow. We pay ourselves. We could be developing the real estate, and that would be like a better use of shareholder capital for earnings per share appreciation, but we don't because it's risky, and we don't want to. We don't need to, right? And if you look at the governance of most, including popular publicly traded corporations, there's the spectrum. That spectrum is kind of down to like the ethos, like someone like Tim Cook has an ethos, I guess, of like, we owe it to all of the hedge funds and pension funds, et cetera. So, I mean, it's a deep problem. And this is why VCs like to get to know founders and try to like look them in the eye and see what they're really made of and see if it's someone you can trust, because it ultimately just, even, you know, look at WeWork, right? That was the darling of everything. And that guy like borrows money personally from the company to like make it, I mean, unbelievable. Oh, sorry. Am I talking too loud?
Oh, no, you're good. No, it was just your mic was going up and down, but I think we got it fixed.
So it's a deep problem. And then when you look at open source projects, you know, I mean, like me personally, like my financial life is singularly defined this year by this question of how do you fund this stuff? And well, I just threw my money at it so it could get done. You know what I mean? And then, you know, of course I want to have like a profit motive so I can get the money back in time. But so I've tried to follow a path where I don't do an ICO. I raised a little bit of money, Reg D 506B, where it's, you know, by introduction, and not a lot. I wish I raised more. And, you know, okay. And then there, you know, there's a little, the company has like a stake in it, in this ecosystem, but it's got to be a moderate one. So if you come out and say, oh, we've got like a 20% founder reward, people are going to say, what are you, Zuko? You know, like Zuko's a real mathematician. You're not even a mathematician. So you got to lower the number, right? You got to make it like well under 10%. Even 10% comes off like kind of cheeky, right? And then there's the question, well, like in my thing, are you in the exchange business or are you doing something deeper? So I think I'm doing something deeper that interconnects exchanges as well as allows liquidity to flow in this native environment. So we'll see, you know, and that, you know, we can integrate with the Lightning Network later. That's going to be more dev funding, you know, to tokenize Lightning Bitcoin so you can get that full stack collateral without needing, you know, the custodians are just all these dudes, you know, in these finger trap multi-sig setups and then that routes around. Okay. So that's where we're going. I like that. Look at what happened with Grin. I know a lot of people think, you know, Grin's a shitcoin because they're Bitcoin 100%. That's fine. You have the portfolio you want, but you know, this guy goes out asking with hat in hand for like 50 grand so we can eat ramen and keep coding on this. And I feel like I might be right there with him, you know. I'm gonna just do a GoFundMe and like I funded a protocol and now I'm broke and I need some money. So you know, maybe we can. And then you look at like all the VC coins, right? Like Algorand and Hedera Hashgraph, and they get these massive overhangs, just like we had with the ICOs. But the original funding was done in a compliant way, and then like the legal nature of the floating instrument thereafter is a little bit ambiguous. But given the EOS slap on the wrist, 60 basis points of their total raise, let's say their US component was 30%. I feel like that's a reasonable estimate, maybe 20. So we're still talking about a few percent penalty. And they got a sort of hall pass is the way that they kind of spun it. Unbelievable. So I don't know. It seems like there's so much overhang of deep in the money, like paper profits from concentrated investors, that this will perhaps constrain the market growth of a lot of these latter day coins, just because like they're going to be drowning in float for the next 2 years to make a price base, right? So that'll like delay the VC cycle. So maybe we'll get even less VC professor coin money, and the whole sector will cool. And then, the cream floats to the top, whatever, right? So at some point you got to actually have apps that do a lot of volume and that have a like fee cash flow, right? So that's where the rubber really hits the road. Like Lean Startup says, you figure out who your customer is and you find your unit economics with like 25 grand in your pocket. Then you get some cash flow. Then you show the spreadsheet. Then you raise some money. These guys raised $100 million and they tried to solve proof of stake, And then you got Emmons coin, the Avalanche. That's going to be interesting. That's like a new kind of graph dynamic there. I should probably go dive deeper on it. But yeah, so I like it that all this shit gets funded, but like the moral hazard is disgusting. It's stunk up my life, especially since I haven't been, sitting on a $10 million treasury all these years. I'm just watching this like, so I have feelings about it.
It sounds like there is a bunch of different ways, that people are trying to get funding now, that the ICO is essentially dead because, like we say, we've seen there was even in the January of 2018, even like in the bear market there was still 100 plus ICOs a month. And it's literally this year, like this month, there's been 0, I think. So it's almost dwindled down to just entirely 0. So yeah, so great comments on that, Patrick.
It's a new era.
Yeah, I want projects to get funded just as much as you do, Patrick. But like you said, man, just the moral hazard was just insanity. And
what's really tight is launching something and having organic growth. I think more people should try that.
I know, right? What a novel concept.
Yeah.
All right, let's go with absolutely. All right, let's go with Brady next on this. Brady, I mean, we're seeing the ICOs. We're definitely seeing them flee the U.S. What do you think is next? Do you think that these people are going to start? Do you think IEOs is the next big craze? Do you think how is that doing, or is that going to like go down the route of ICOs as well? What are your thoughts on that?
Yeah, man. I mean, I think the IEOs is just like the next sort of iteration of ICOs. I think there's just going to continue being this sort of like grasping at whatever's possible, over the coming few years until it's clear that we're dealing with a protocol for the exchange of value here. And this is like a protocol. It's not a company, right? You can't compare it to a company. It's not an app. It's protocol. So we're going to converge on one protocol, just like we did with the TCP/IP stack. We got the Bitcoin Lightning Network stack right now. We've got third layers being built on top of Lightning Network already being proposed, like RGB coins that Jacques Mozuko is working on. The Vaulturo is releasing a token with RGB coins on top of Lightning Network. There's also, I think, something called Storm, which is like a kind of like data transfer file sharing on top of Lightning Network. So these are the kinds of things I think we're going to see going forward that'll actually be successful. They're going to have, actual adoption and use on top of this protocol. And hopefully we'll see VCs turning their attention toward these actual legitimate, Bitcoin companies that are being built on top of the protocol. I think, for a while, we're going to continue to see potential competitors, the next Bitcoin, quote unquote, being funded by VCs. Like we've got Hedera Hashgraph, making some noise and all that. But, I think we all agree here that that's just not going to happen, right? Bitcoin is kind of cemented its place as the, native protocol for the transfer of wealth on the internet. And that's where we're headed. So, I think the SEC decision on EOS was like an abomination. It was just like woefully impotent. It's almost like, combine that with the 4-year blockade of a Bitcoin ETF. like it's almost like the SEC doesn't like Bitcoin very much, even though they kind of pretend to a little bit. Yeah, and also like the total disregard of their own rules when it comes to Ethereum and Ripple, right? Yeah, so I think I should also mention like the SEC did approve a raise for Blockstack recently. So like this past summer, Blockstack raised some money on SEC approval from the public. So, you know, that's cool. Like, I think that Blockstack actually has a product they've been working on for, you know, several years, and there's like value there. So I think that they built something first and then sought funding. And it's cool that they open it up to the public. So I like, there's one good example of a blockchain based, you know, initial offering over, you know, what, thousands and thousands of just scammy shit that definitely stunk up my life too. So yeah.
Yeah, absolutely. Great comments, Brady. Great comments, especially about, you know, the SEC. It's just, it does seem like they're pretty anti-Bitcoin. Just their absolutely slow, sluggish, you know, reaction to these ICOs and all these crazy things. Even the IEOs, they're just turning the other way. They've gone after like what, like less than a half a dozen ICOs, I think, from what I've seen in the last couple of years. So yeah, it's just absolutely kind of crazy. It makes you think that maybe the SEC is pretty anti-Bitcoin. So yeah, let's go with you, Wes. What are your thoughts on that? You know, this 4-year blockade on the ETF, and of course is the SEC, in your mind, do you think that they're being pretty hostile towards Bitcoin over these past couple of years?
Well, I mean, it's pretty obvious, yes. I think they are being pretty hostile to Bitcoin. I mean, they've set a dangerous precedent now with that slap on the wrist for EOS, and I think that might encourage, you know, these statistics that we're looking at of the decline of ICOs, and that we might be looking at that ticking up again, actually. You know, because it's not as if people are being put off by that slap on the wrist that they gave to EOS. And let's be honest, okay, so the acronym ICO might be dying, but in reality, the projects are just renaming the acronym, you know, to IEOs or SCOs or whatever you want to call it. Albeit, you know, some of them might be more compliant than others, and they might follow a more strict sort of regulatory approach, like that Blockstack that you mentioned. I don't think that the fundraising aspect of ICOs will go away. I think that people will just iterate into the next fad. You know, one thing what we can say about the ICOs is in 2017, whether we like it or not, they brought a lot of people into the cryptocurrency space, into Bitcoin space. You know, people were talking about it. People, oh, I made like 5,000% on some shit coin or whatever it was. You know, that news spreads quickly, and a lot of people were introduced to the crypto space, albeit maybe they got burnt and maybe in a negative way. I think it served its purpose, and some will say it was a distraction, but you know what, it served its purpose. It's also been a very, how would you say, a very cruel and maybe harsh teacher to many. And I think that, you know, human nature is to try and make a fast buck, and it's still going to exist. And that the fundraising mechanism will just iterate into some other beast. But yeah, I'm glad to see that there's less of them, and that they're going more the regulatory approach. But yeah, I don't think it's going to go away. Just be rebranded, repackaged, and put out there again.
And I think that's important for people to remember, like, you know, the idea and concept of scamming people, of course, is never going to fully go away. And so they will always try. And remember, the technology will always be ahead of the regulations, always. So, you know, there's always then going to be this opportunity just waiting there for people to take advantage of, to, you know, essentially scam other people. So let me ask you this then, you know, because you brought up an interesting point about maybe there will be more of these scams coming out now that we got just this little slap on the wrist ruling, you know, from on EOS. Let me ask you, like, what are people supposed to think when we have Blockstack going the legal way, raising a couple million, just the absolute regulatory, you know, way, and then you have EOS raising billions of dollars and only paying 30 million? Like, what kind of precedent does that set? Because you talked about it a little bit. Maybe you can elaborate just a little bit more on that. Oh, we'll go with you, Patrick, after Wes.
Yeah, well, basically exactly that. I mean, you know, it would have cost a lot of money for Blockstack to put together a regulatory compliant fundraise. And we're not talking a small amount of money. I mean, to get all the lawyers and to get everything through and approved would cost 6 figures probably, at least. And and look at how much they raised, rightly, as you said. And then I look at EOS and you do the maths and you're kind of like, well, that's a good ROI there. 30 million, okay. And I raised like what, $2-3 billion or something ridiculous like that. I mean, yeah, it's pretty enticing, isn't it? You wave that type of money in front of people, you know what's going to come out the woodwork. So I actually wouldn't be surprised if there's people right now working on some fairly hefty raises.
Very, very interesting. Patrick, you had a point on this. Go ahead.
Well, I don't agree with the take that this is going to open the floodgates, because I think if anybody has any level of counsel and, lawyers, like the SEC has done some pretty harsh interventions lately. They indicted a lawyer who gave an opinion about a token under a criminal, not just like you're going to lose your license kind of a deal. But since we're putting this to bed, my like Daily Show style retrograde like memorial to ICOs. What's the shadiest thing about ICOs? Okay, well, there's treasury management, there's the governance, there are these little coups that seem to happen like a lot, because it's like, oh, well, I changed the document and I hold the keys, so fuck you. Like, you can do a coup in one of these ICO foundations like that, basically. I didn't do it because I think it's shitty, but like people have done it. It happened even in Ethereum with Gavin Wood. So my number 2 most corrupt thing about ICOs would be the coups. And of course you have to mention the coups because they always have a story, and there's a 3-part narrative structure. So that it's always interesting. But the worst thing is how motherfuckers raise some money, and they do it through like a variety of addresses, and then they cycle it. And they take the proceeds and then they recycle it back into the ICO. So then people go, oh wow, EOS has raised $1 billion. Let's throw 50 grand at it, whatever, right? And then they pile up the next billion. And it is a general tendency in fundraising that you will raise more money as you hit certain momentum targets, because people want to bet on a winner, right? So they would just run the confetti machine and scam people that way. And every major ICO has done this. Not every ICO. There are probably smaller ones that raised, hundreds to a couple of thousand BTC that maybe didn't. But all the ones that did like 5-figure BTC totals, I think were washed. Ethereum, or you also have these investor syndicates who will sort of front the window, and then they have like governance hooks on the back end. So it's kind of like they're like investing their own money that they're also holding, So then there's all these self-dealing type relationships. That would be like my number 3 thing, would be the self-dealing. So yeah.
Just a lot of shady stuff, man.
Worst 3 things about ICOs are washing the window, coups, and then self-dealing would be number 3.
Absolutely, and that's just crazy. And what's crazy is that people aren't even aware of this, Patrick. So I'm really glad, that there's people out there
how
like
the sausage is made.
Absolutely. So it's really great because a lot of people like to, of course, we always want to believe the best of people. We always want to believe the best of people first, and so people seem to not even be aware of this type of level of shadiness. But it gets that deep and deeper, as I'm sure Patrick can attest to. So it gets really, really crazy. So great points, guys. Great points. Let's get final thoughts from Brady since we went to everybody else twice. Let's get Brady in there. Go ahead, man.
Yeah. One last thought. I think it's important for us as Bitcoiners to say, though, that, we're not like begging the SEC to come to our rescue here or anything, right? We don't necessarily want the state to come in and regulate all this stuff. We want to have like a free market and have this be available. We'll expose them by talking about them like this on shows like this and on Twitter, and educating everyone about what's going on here. And I think that, 2017 and early 2018 was, gives us tons of ammo to just say, look what happened. All right, don't let it happen again. There were so many people just like wouldn't listen to us at all, to Bitcoiners through that time, just laughing at us and whatever. You guys are off to the side here. Bitcoin dominance is dying. The flippenings, all kinds of flippenings, all this and that. No, that didn't happen, because all of that was a bunch of empty scammery that was going on, just as Bitcoiners were saying. And so there's a lot more credibility on the Bitcoin side now, the Bitcoin argument side now, because we've got that vindication. So we don't necessarily need the government to come in to kind of, wash all that stuff out. It's going to happen anyway. And, that way the innovation won't be stifled. Government kind of comes in and will really kind of mess things up basically, and could do a lot of damage. So we want to try to, like, when we talk about things like this in the SEC, not, doing enough or whatever, let's also sit back and say, like, make sure we point out that we don't need them necessarily to do that. So it's still fun to talk about though.
Yeah, absolutely. And, there's great points from, I think, both Patrick and Brady. I mean, you kind of make this point that hopefully, though there was that opening, from the EOS slap that maybe for more scams, we hope that that anybody's just basic level counsel will be able to steer them away from this kind of raising tactic because of all the hard evidence that we have from 2017. So we hope that that's the case, but you never quite know. That it could get really crazy again, especially when Bitcoin price starts to rise. Because again, guys, this stuff is so complex. You just tell somebody that this is just like Bitcoin but better, and they're going to believe it, and that's going to go for a few more years at least, really until Bitcoin is well over 100,000. In my opinion, this is going to keep happening, because when you talk to the average person, you're like, look, it's $8,000. It's this world-changing technology, and they're like, world-changing technology, but that's the price of my Buick. $8,000. It's like, it's not, that's the price of like my 90s Buick. So it's not like it's super important to them. But when Bitcoin is over 100,000 and then reaches that 500,000 and then to 1 million, when you tell people just one of these coins is worth hundreds of thousands of dollars, it's worth more than your house, then they're going to start, I think they're really going to start to pay attention a little bit more. That's the average end, average Joe way at the end when we're starting to hit mainstream. But so that's just kind of the way it is. Cause I really thought, like, I'm like, we can get the whole world in, like, no problem. Everybody's gonna get in, everybody's gonna make money. And of course, we're up to like 6,000 to 8,000, and we have like, 30 to 50 million users worldwide so it's going to take some time. And the fact of the reality is that Bitcoin won't be an investment vehicle for everybody like we want it to be, but it absolutely will be the internet of money and will create this utility and this amazing opportunity for anybody in the planet to have access to this worldwide financial network that is open to all. And that is just a huge win for humanity in general. So great points, guys, on this topic. I think we can move on to the next. Really appreciate it. But again, before we do that, guys, please hit that thumbs up, hit that subscribe button, and definitely give everybody on the show today a follow. We got the Twitter accounts in the show notes. Everybody's having a great time in the chat. We got Uvas, we got Rico, Liberty. Thanks for that tip, Rico, and thanks for that tip, Uvas. Really appreciate it, guys. We love you guys. We love everybody sharing the passion. So everybody's having a great time. We got Castle in there, ATR, lots of great people. So really appreciate it, guys, for being here live. And again, if you guys missed the channel or missed the show, missed the live show, definitely check out our audio stream. We have that on Spotify. And of course, definitely join us in the comments. So let's go ahead and get on to our final topic of the day, ladies and gentlemen. Bitcoin is 2019's best performing asset, even after the recent price downturn, which is, if you just think about it, crazy. I mean, if you guys look at the greed index, right? The fear and greed index, it's just like all the way down to like fear. Like people are just like jumping off of buildings almost. Like it's just, everybody's so afraid. And it's so funny to me because again, guys, we are all up over 100% this year. We are up over 800% since January of 2017. It's absolutely ludicrous. And so I want to get some of the panel's opinions here, because we have Bitcoin prices that have more than doubled in 2019, far outpacing the 31% return for the US tech stocks. We got gold up only 17%, S&P up only 21%. And then of course we have government bonds that are at historic lows in the US and friggin' negative almost anywhere else, in the world. And there are literally trillions, guys, of dollars of government bonds from Europe and Japan with negative interest rates. So, let's go with Brady this time first. We'll mix it up here. Brady, like what are your thoughts on Bitcoin's gains this year? Like is Bitcoin's gains already sort of enticing institutional investors like pension funds and endowments?
Yeah, I don't know much about institutional funds and pension funds and endowments, but and we've been talking about the institutional money thing for a long time. So I don't know what they're going to do. That's not my world. Patrick can probably talk more about that. But I think that, yeah, I mean, this is what Bitcoin does, and the fact that everyone's like, freaking out that we're below 8,000 now is yeah, I've been there. We've all been there. But this volatility just sort of forges the strong hands. It forges the Bitcoiner, the holder of last resort. Right. And so I don't feel anything at all. Like whatever, I do a little bit. I'm not going to like sit here like I don't have emotions at all, but like I really don't care compared to the panic and elation that I felt when I first got in with every price move. I don't watch the price much anymore. I did look at it before we got on here, so I saw we were down below 8,000. But yeah, I mean, Bitcoin's up 4,500% over the last 5 years, 1,200% over the past 3 years, 100+% this year. So yeah, if you hold for a few years, you're going to be way up, and that's just the price of the monetization process that we're living through right now. It's going to be volatile, but there's this sort of like S curve of adoption backbone. We're going to be above it and below it. Or if you look at Plan B's stock to flow model, we're going to be above and below it, but we always kind of come back. There's this kind of magnetic spine in the middle of that graph that chart that gets pulled back to either way. So yeah, it's just a matter of hanging in there over time. I'm not surprised at all that it's the best performing asset. People should get in. This is not an asset to day trade for 99% of people. This is an asset that it should be bought, held, and then to learn about. Once you have some skin in the game, you'll be incentivized to learn. Then you'll eventually start teaching or making content and educating, working in the space. More and more people are getting hired by Bitcoin every year. So this is just another one of the sort of the effects, the layers of network effects that Bitcoin has, and Bitcoin's literally like creating its own marketing team, its own education team, its own development team, obviously from long ago. So yeah, Bitcoin's just doing its thing, and it's awesome to be here. It's awesome to watch, and I'm excited to be a part of it.
Whoops, absolutely. Yeah, just great points. Really great points. Of course, guys, none of us here are like, super experts on everything, right? We're all not cryptography programmers. I can't talk today. We're not like protocol programmers, all of us, and we're not all geniuses on Wall Street, but we do have a great deal of passion for this stuff, and we love to talk about it. So great points, because again, like Brady said, we don't want you to get into this asset like a day trade, right? We don't want you to do anything like that. We want you thinking long term. This is what Bitcoin does to you. It really makes you think in terms of halvings. Like 4 years, okay, what's going to happen in 4 years? Okay, got that plan. Now what's going to happen out in 8 years? Okay, then 12, and on it goes, because this is how Bitcoin. This is where the volatility comes from, is these halvings, some of the volatility. So we have, and another great point you said, Brady, like no one really in Bitcoin is underwater longer than a couple of years. Like you just have to have patience. This is a 3 to 5 year investment horizon, minimum at the very least. So really important to keep that in mind. And just another final great point: more and more people, guys, are getting hired by Bitcoin companies. The Bitcoin ecosystem is growing. The Lightning Network ecosystem is growing. There's going to be the first Lightning conference in the world this October, at the end of this month. That's going to be great. It's going to usher in basically the next era of Lightning Network, and the companies and the apps that are doing that and that are working in that space. So that's just really great, and really great points. Let's go ahead and go to Wes next on this. Wes, what are your thoughts on this? I mean, we have the hash power like still just doubling, like from where we are from the beginning of the year. I mean, is this like a signal that another rally is coming?
Yeah, I mean, I would say so. I think there is something around the corner. Although, if I remember back to previous halvenings, we do flatten out on price and volatility leading into the halvening. So, we could potentially. I mean, people are super bearish at the moment. I mean, if I look at that fear and greed index, if I just do a cursory glance at a few of the more famous YouTubers out there, so, the minute we get down to these levels, they start calling for like 1K again, or some ridiculous.
I've heard the 2K calls already, the 4K calls.
Yeah, and it's kind of like when you start hearing stuff like that, it's time to stack up some more, and the price is probably going to do a U-turn. But on Bitcoin being the best performing asset, I mean, I think it's just about being every single year since I've been in Bitcoin, I've seen a headline like that. I mean, let's be honest, at one point in every single year, it must be the best performing asset every single year from the beginning. And, the nature of Bitcoin being currently such a small liquidity, relatively speaking, compared to other assets, it's going to be volatile. So, the trajectory up is up on the macro. But, if you're going to zoom in on the day-to-day minutiae of the market, it's going to be up and down and up and down. It's going to mess with your emotions, and it's testing. And to read something, I guess I'm not surprised, but I'm glad it's out there. Mainstream media needs to push more of this out there and make people aware. Bitcoin hasn't gone anywhere. I mean, just the other day I was talking to somebody and they said to me, "Oh, is that Bitcoin thing you still into that Bitcoin thing? I thought that thing was dead." I was like, oh God, here we go again. Are we in that cycle now? The Bitcoin's going up, guys. It's not going anywhere. It's definitely benefiting from the Lindy effect. It's getting a series of higher lows every year. Yes, if you zoom in down to the crack minute time frame, it's going to fluctuate like crazy. And you're going to lose all your hair if you're going to fret over the price all the time. But if you zoom out again and you look with a 4-year time horizon, or even just a year or two's time horizon, you'll be pleasantly surprised that you're going to have probably triple-digit growth percentage-wise in your Bitcoin relative to the USD. Let's not forget, we're talking relative to the USD. As long as we are valuing our Bitcoins in USD, that is, one day perhaps we will not even be using USD as the unit of measure for our Bitcoins.
Absolutely. I look forward to that day. That is going to be a great day when we're just going to understand that one Bitcoin can buy a country. Basically, at that point, like getting towards 2028, when they're just we can't even think.
Maybe sometime towards the end of next year, right? That's when Bitcoin will be like.
Yes, that's what we're saying. No, great comments, Wes. It's true. What Wes says is true, guys. Look, if you guys are scared at the price right now, the price levels, then you are overexposed or you are undereducated. Like one or the other, guys. It's going to be one of those two things. So make sure you get yourself educated and you don't invest more than you can afford to lose. So great points, guys, so far. So Patrick, let's go to you on this. The market's man himself, man. We know that you got a lot of experience on there. So let me ask.
My main advice to people.
Hold on, Patrick. Hold on, I got a question. I got to ask you something before you go. So
Sure.
So we got because people are now starting to recognize Bitcoin as this uncorrelated asset, and I did mention the institutional investment coming in. I'd like to get your thoughts on that, as well as do you see people seeing Bitcoin more as a safe haven asset, even though it is this still speculative store of value?
Well, it seems like the safe haven asset still is USD, right? So when the reason why something like Tether, which you would think is like, triple C or double B rated, like no yield bills, or people are buying negative yielding bonds, right? So why would they do that? Well, they want the predictability. It's the same reason why people hold custody with Coinbase. They want the comfort of not having to be responsible. But most of what the negative yield stuff is banks using repo to stuff their balance sheet with short-term liquidity that can offset the risky stuff, such as Patrick Dugan Citibank personal loan note, which is a high-yielding asset with risk, right? So, like, if you just put this into perspective, so then Patrick Dugan has all of his money in Bitcoin, and you get the credit cycle, right? And then as millions of desperate young people do this, and they combine it with degenerate leverage speculation, you get into an interesting crossroads in history. I was talking about this when I went on Sam McCullough's podcast last month, that the big macro trade-off is you have all these like retirees who want a dollar yield. So they'll go short the derivative and like go long spot, and you create a dollar neutral with a little bit of premium, and that it's like, so for instance, right now, the index is 7,908 bucks on top, and March futures are at 990. So the annualized interest rate of having this position, it would be 2.2%, which is competitive with elongated U.S. Treasury bonds, but it's a much shorter duration. So that's interesting, right? So if anybody were to say, oh, let's apply that mathematically to how we run our pension funds or how we run banks or central banks, the thing is, the market would have to grow exponentially. It's like I like to study cosmology as a hobby. And in cosmology, you have like this rupturous expansion of the universe. You have like the Planck heat, and it just gets cooler and cooler. And you go through these successions. So, the Bitcoin liquidity, a lot of y'all, because y'all are hodlers, right, are anti-tradeling. You think tradeling is the degenerate habit of the fallen angels, but like the thing is, we like go through hack psychologically, and we follow our greed demons, and we provide liquidity. And so what could happen, like that I've been hoping for, is as we go to 100K and beyond, is that young people with a few bit cents or millibits even to start in disparate corners of the world can go take the other side in these global, like there's a regulated tier, there's like a looser regulated tier, you know, and it's this global environment, and then all these other venues are around that. And so ultimately they're taking, by the transitive property, they're taking the liquidity of these pension fund guys in New York, or these reinsurers who are trying to get yield in their treasury, et cetera. And that's good, you know, but those people aren't going to just dive into it. It's a long-term process, you know, it's a very long-term process. So like right now, Bitcoin term structure with the derivatives isn't that great. You can only get this like treasury bond equivalent yield, albeit with a very short duration. So if T-bills were paying that, people would be, that would be a very different world, right? So it's almost like Bitcoin is this bizarro world financial system where Paul Volcker is the Fed chief, but it's Satoshi's, you know, havoting, et cetera, right? But it's just like Milton Friedman talked about, and like Volcker was kind of sympathetic to the Friedmanite ideas. That all came into I don't want to segue too much, but like there was a fad of like Margaret Thatcher tried it of like, let's control the quantity of money and like keep it honest, and that led to like recession. So, you know, Keynesian money gets these things flowing, and you know, it will not stop doing what it does, and the political imperatives are only rising. So you've got the rise of Xi, you've got the rise of these Antifa kids voting for Elizabeth Warren or whatever, and these are, you know, or you've got the right-wing authoritarian type guy who says, you know what, I'm not going to play by the IMF playbook. I'm going to do aggressive stimulus for, you know, infrastructure projects, right? Like the Hungary guy could do this, right? So you call it the Hungary Games. And, you know, this could percolate, and then you get into this geopolitical matrix where it's not a cooperative game. It's a game of making aggressive first moves. So, you know, like there's all these macro things long-term that help Bitcoin, blah, blah, blah. So I'm personally flat right now, and I'm short puts. So I'm holding synthetic cash. And as the market ticks lower, because we're in this, you know, short-term downtrend on the hourly scale, moving averages are falling, I get to see my corn go up. So instead of, you know, buying dollars with your corn, and you're like, I have $1,000, and then you're like, when will I buy Bitcoin with my $1,000? You actually see this real-time P&L, so it's kind of psychologically more satisfying. And I look at it like the risk is that I will get, you know, Bitcoin will surge in like 2 hours, and I'll get smacked in the face. And it happened to me last Saturday. I woke up from a little nap, and I opened a short, and then I went to go get some McDonald's, and the freaking thing ripped all the way to like 450, and I covered right at the top, and then I went down. And I had to ask myself, you know, like I had to look inwards after that moment. I was furious. I was yelling at my wife, was like, you know, you're scaring me. I was like, I'm really sorry about that. I need to like reevaluate my trading. So what happens in these low liquidity environments is like whales will ping pong this stuff around and make money on the derivatives, and the tail comes to wag the dog. So when you get into a negative basis term structure with the derivatives, such as you can buy the perpetual swap at a 6 basis point discount and start getting paid, people who have access to OTC or, you know, spot borrow supplies, like with Genesis and Paxos, and in Asia, there's probably, you know, big desks. So they'll borrow Bitcoin, sell it spot on the less liquid spot markets. And sometimes they'll even go to things like Tether because they have more of a liquidity edge and they can pay lower fees, right? So you get this tail wags the dog situation where all the degens getting wiped out, and they drive the term structure goes like this, where you got a positive premium. And I happened to get short, not even short, like 1x hedge. I put in a stop order to double down so I'd be short under the low. This was around 9,500 and some change. And I was like, oh, I should have sold at 10, blah, blah, blah. And, you know, we had broken out of this big triangle going back, you know, this is like June, we had the high, we had this parabola, and then we get a smaller moves, right? So it's like a seasonality to the volatility, right? And then ultimately, this is a market where like dudes got to sell to pay rent, and miners got to sell to pay the electricity bill. So unless you have a greater amount of instability outside that's driving net inflows, or you have this like coagulation of like DEX liquidity and derivatives that I've been trying to promote that might create more of a collateral soak, where there's like different terms of time where Bitcoins are set aside for positions that might not be speculative long Bitcoin positions, right? Unless you get these things, then, you know, the tape will, I gotta sell, let's take this liquidity. And then, oh shit, let's take all the liquidity. And oh, let's bounce, this was a big move, maybe we'll, you know, and then it bounces and it falls over, you know, and it goes on and on like that. So at some point, this will bottom. Whether that point is at $30 or it's at $6,000 is, you know, is the fundamental concern, right? If it's at $30, I might give up on Bitcoin, to be fair.
Well, I don't think we're going to be going on the $30.
Right. But
lots of great points in there, Patrick.
But you have a risk, right? There is a risk that your investment could go to zero, and you have a risk reward of like $6,000 or $8,000 versus the $100,000 that you expect, or that you hope for, rather prodigiously. So what I do, because day trading does drive me insane also, and it loses me money, it loses me corn, which is like 10 times the amount of dollars in the future. This is something I've appreciated from losing tons of corn to hedging over the last cycles. And I'm like under hedged, so I'm net long. Like, oh, you're a loser, man. Fucking, you should have doubled your corn and made a shit ton. You know, you should have worked that leverage. So, I mean, you know, life lessons, right? So I like call calendar spreads. You buy a long dated call, you sell, so like long March, short December. So I was staking that level around 16K when we were around the 10, 11K range. And I've rolled that down to 10K. So that's kind of building up a little bit of a gamma for me over time. And it also pays me a little bit of theta. I'm also short gamma, short volatility, long theta by just selling puts. So I'm short like 6K, 6.5K. I just bought 8K back before we took this dive under 8K, or when it like went to 79 and some change before we went lower. So I rolled that down to 6K for December. So I've got like a calendar, I've got like a ladder of different times, and therefore different, like there's like a trade-off. If you're like a bull.
We gotta wrap it up a little bit there, Patrick.
So if you're a bull and you sell a long dated option, you take in a lot of Bitcoin premium. And then if the price suddenly goes up, you will earn a lower interest rate or theta rate, but you'll have more, you know, if the price were to go up 50% and leave your strike long behind, you would have more premium. You might be up 10, 12% on the premium from like your one Bitcoin, right? And if you sell more short dated, you'll get a higher rate, but then short-term moves will hurt you more because you have less premium to protect you. And then I like to keep it a little bit out of the money. So the idea is, okay, this could take a while, but I'm going to collect premium. I'm going to stack those sats, right? And then I can trade a little bit on like the 4-hour, maybe daily scale, you know, looking at, okay, here's a level where we want to be long, blah, blah, blah. Or like, this is falling over. Let's put the hedge back on, which is what I did when the moving averages were falling over a couple of days ago.
Yep. Well, great.
So
lots of interesting strategies there.
And the options give you an edge over time, and that's the focus is accumulating edge.
Right.
Because that's what Bitcoin is supposed to give us, is this real trend where, like, you know, we're shifting to a new money economy, right?
So right. Well, check it out. You could do all of that. Or you could hodl, right? So it all depends on what you want to do. So lots of interesting strategies there, Patrick. Lots of interesting insights on there. We are running late, so we're gonna go ahead and wrap it up. But let's go ahead and thank our guests. No problem, Patrick. Really appreciate everybody. As usual, let's go ahead and show everybody here the gallery so everybody can see. I really appreciate everybody being on the show today, guys. Lots of great comments, lots of great points from everybody. You guys all killed it. Definitely make sure you guys check out these guys' podcast. Patrick doesn't, for some reason, have a podcast yet, but I'm sure that someday he's gonna freaking create one, because the dude needs a podcast ASAP. So thanks, really appreciate it, guys, so much. Patrick, why don't you tell us where we can find out more about you, sir?
Oh yeah. Follow me, Duganist on Twitter. TradeLayer.org has some like FAQ stuff about TradeLayer. We're trying to push out the Block Explorer, get some bots up so we can show some data in there. then polish up the wall a little more, QA, blah, 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 a lot of work, and push that out. So we're trying to do that like soon this time, for real.
We're working hard over there at TradeLayer, guys. Working hard over there at TradeLayer. So definitely check that out, guys. If you're into trading at all, any kind of trading, make sure you check that out. There's some interesting stuff that Patrick is doing over there that's going to come to fruition very, very soon. So thank you so much, Patrick. Mr. Brady, where can we find out more about you, sir? You have an amazing podcast. Tell us all where we can find it.
Citizen Bitcoin Podcast. Search Citizen Bitcoin in your podcast app, at Citizen Bitcoin on Twitter. And what we just listened to from Patrick is why I am not a trader. I do not want to trade against Patricks of the world. And
For real.
there are very few of them like Patrick out there, and they're winning and not us. So just hold and let Patrick provide the liquidity to the Bitcoin network that we need. So thanks for having me, man. Appreciate it.
Yeah, that's a great point. I did want to bring that up. Patrick had a great point, guys, because traders get a lot of flack and things like that in Bitcoin from all the hodlers and stuff. But again, guys, super important to remember: traders provide that liquidity, guys, and that is the number one network effect in Bitcoin right now. So definitely keep that in mind. So great points, guys. Great points, Brady. Wes, where can we find out more about you, sir?
Yeah, sure. You can find us on iTunes, Let's Talk Crypto, and all the other major podcasting platforms. We're also on YouTube, Let's Talk Crypto, just search for it. On Twitter, you can find me at ThunderMimble. And you can find me on cryptofish.com. That's where we sell Bitcoin.
Definitely check that out, guys. Lots of good stuff on there. I just did both these guys' podcasts, Brady and Wes. So make sure you check them out. Really great podcasts, really great content. So much content. It's getting hard to keep up with it all, but I really appreciate it. Again, guys, we see all this passion. We see all this enthusiasm. This is the future, guys. The Bitcoin is going to take over the world. This is an inevitable thing, and we're just here to hopefully try to guide you guys through it. So really appreciate it. Again, everybody joining us, everybody in the chat, Uvas, Rico, Liberty, you guys all killed it. Had a great time, great conversation. So until the next time, guys, please, we'll talk to you later, but please, guys, always keep talking Bitcoin, and we'll see you guys later. Bye-bye.
Bye-bye.
Thanks, guys.